Hello again, I'm Rachel and you're watching 𝐊𝐴𝐴 TV live from Sydney. This is the Stocks in Action show. In today's show, we'll take a look at the latest updates from Australia's leading energy firm Woodside Petroleum, pharmaceutical company Telix and Australian multinational specialty biotech company CSL. We'll also cover healthcare company Fisher & Paykel and fintech company Net Wealth Group. We'll be looking at their results during their respective financial year, dividends distributed and their latest updates. Lastly, we'll take a quick glance at developments across the ASX, so stay tuned. Our first news covers Australia's leading energy firm Woodside Petroleum. As announced yesterday, mining giant BHP is set to merge with Woodside to claim the title of Australia's largest publicly listed energy company. The $20 billion merger will push them into the top 10 energy companies in the world. Woodside shares, meanwhile, are trading down today. That's after the company reported their half-year results for 2021, with a recorded net profit after tax of $317 million. Underlying net profit after tax was up 17% on the corresponding period in 2020. Woodside's operating revenue rose 31% year on year. That's mainly because of increased realised prices. The directors have declared an interim dividend of 30 US cents per share, representing an approximately 80% payout ratio of underlying net operating profit after tax. The company recorded a positive free cash flow of $311 million and liquidity of $6.38 billion. It achieved strong production performance from Pluto liquefied natural gas and the Wheatstone projects. Woodside also finalised arrangements with the Western Australian government to process third-party gas from the Pluto fields and 𝐊𝐴𝐧𝐿 project. Next, we're taking a look at Telix Pharmaceuticals. Their shares were trading up today after the company entered into a pan-cancer clinical collaboration with Merck. Merck is a German multinational science and technology company. The deal is to conduct combination studies with one of Merck's investigational proprietary DNA damage response inhibitor molecules in combination with each of Telix's molecular targeted radiation therapeutic programs. The announcement stated that this clinical collaboration builds on the success of a strategic research collab, which was an agreement between Telix and Merck that was first announced back in August 2019. Now, it should be noted that Telix's molecularly targeted radiation therapeutic program is a late-stage product in development for prostate cancer, and another one is indicated for renal cancer therapy. Moving on to the next news now, CSL, an Australian multinational specialty biotech. Their shares are trading up currently. That says the company shared its key financial and operational details for the year ending 30th of June 2021. The company reported net profit after tax up 13%. Its earnings per share is also up 10%. It's announced a final dividend of $1.18 US per share. Total full-year dividend, therefore, has increased to $2.22 per share, up 10%. CSL shared that they entered into an agreement to manufacture the Oxford University AstraZeneca COVID-19 vaccine. Also, the company worked with the University of Queensland to develop a COVID-19 vaccine during the year ending 30th of June. Now it's time for a very short break, but stay tuned. I'll be back with more trending updates from the Australian market.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐴𝐴 TV.
Welcome back. This is Rachel, your host, live from 𝐊𝐴𝐴 Studios, and you're watching the Stocks in Action. Next, let's look at the healthcare company Fisher & Paykel. Their shares are trading up today after the company reported their first 4 months of 2022 financial year ending 31st of July 2021. Revenue for the first 4 months is $583 million. The company informed that 74% of its revenue is from hospital product business and 26% from the home care business. In constant currency basis, revenue is down 2% on the previous corresponding period. 66% of its hospital revenues from their sales of consumables, 34% from hardware sales. Its hardware volume remained elevated from pre-COVID levels. In the short term, Fisher & Paykel expects hospital sales to continuously be impacted by COVID-19 related admissions. It's likely to influence their consumable sales over the short term. In the home care product group, growth depends on new patient diagnosis rates, which it expects to be the same or higher than financial year 2021. Fisher & Paykel also expects transport and research and development costs to be elevated in the coming years. Lastly, let's look at the shares of Fintech Net Wealth, which are currently down after the company reported its financial year 2021 results today. Its net operating profit after tax is growing 23.9% in financial year 2021. The strong growth in earnings is due to a 17% increase in platform revenues. Revenues have reached $142 million, with a significant increase in funds under administration to $47.1 billion as of the 30th of June. The revenues are highly recurring and predictable in nature. Net wealth earnings per share is 22.1 cents in financial year 2021, increasing to 24.1% year on year. It has a high earnings before interest, taxes, depreciation and amortization margin of 54.8%, which is 98.1% correlated with pre-tax net operating cash flow. Now, Net Wealth is debt-free and has significant cash on hand. In financial year 2021, it spent on strategic investment across the IT infrastructure, software and people to support ongoing growth. Now, before wrapping up, let us glimpse quickly through developments across the equity and commodity markets. The S&P ASX 200 is up today, gaining 0.13%. Shares in Beach Energy are up 7.49%, while Domino's Pizza Enterprises shares are up 4.44%. 8 of 11 sectors are currently higher today, along with the S&P ASX 200 index. Utilities is the best performing sector, while materials is the worst performing sector just before lunchtime. That's all for now. Stay tuned with 𝐊𝐴𝐼𝐴 TV for more live market updates. We'll be back with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.